Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.Exchange. What a disappointing trading session. In the pre-market report, HDFC Bank indicated 2% gap down opening. I had no clue the Bank Nifty was down. And later, there was some news saying that some MSCI rejig issue. They expected MSCI to increase the weightage in one go, but now they are increasing in 2 installments or something like that. So we really don't understand what is this MSCI rejig. Every time MSCI rejig comes, stocks react violently. And today HDFC Bank has fallen about 3%, and that has dragged the market like anything. In the morning, HDFC Bank, taking out the HDFC Bank, the market was in positive territory for first half of the session. But still, throughout the session, HDFC Bank did not recover. Then other banks also started falling. I think the Bank Nifty has fallen about 750-800 points from intraday high to low. Even on a closing basis also, Bank Nifty has fallen about 750 points. Since the budget day, Bank Nifty has been underperforming. Yesterday, because the consumer price inflation data came the lowest in last many years, and we thought the banking stocks are likely to do well, but that was not the case just because of HDFC Bank. On the other side, ban was lifted in Adani stocks. I think the Adani stocks shot up. Many people are talking, is today's fall has something to do with the Hindenburg? I don't think so. So if Hindenburg is the reason, all the stocks should fall. But today, if you look at the internals, nearly more than 90-point fall in Nifty came only because of HDFC Bank. So it was totally only HDFC Bank followed by other banks. And markets continue to fall despite the global cues are good. And in the afternoon I checked, Asian markets were higher, European markets were higher. Of course, later I think 1 or 2 European markets came down slightly. US futures are higher. I think in US, people are expecting better producer price index data, which is a sort of a inflation data. They're expecting a better data. So that's why US markets, the futures are higher. But despite all those things, and here it was a totally disappointing, Nifty falling, then recovering 30-40 point, again falling, again recovering 30-40 point, again falling 50-60 point, At some point of time, it went very close to 24,100. And the fact is that yesterday there was a Hindenburg news. Today market falling below yesterday's low. Technically, this is a very, very bearish sign. And however, Nifty closed around 24,150. So if everything goes well, Nifty should take support around 24,000, because the Nifty has taken support around 24,000 multiple times. But if that is broken again, then the picture will be very, very bad. So anyway, I'm not bullish over a period of 4 to 5 months, but at the same time, we are also not bearish, because the way domestic institutions are supporting, this is clearly a tug of war between FIIs and DIIs. I think since January, FIIs have sold for more than 1 lakh crore, if I'm not wrong, around 1.25 lakh crore. The domestic institutions have equally bought. So, stock market is the place nowadays where FII come and sell every day and the DII come and buy every day. Today I need to go out, so therefore I'm recording the video much earlier. So FII data will not be there. But I'm sure today also FIIs would have sold a big amount, while the domestic institutions would have bought. But the way it was falling, probably, yesterday FIIs have sold, but the domestic institutions have bought about 200 crore less than what FIIs have sold. So probably that may continue today also. And looking at the open interest, there was unwinding in put options from 24,400, 24,300, 24,200, and there was a huge call rating 24,200 to 24,500. And in case if producer price index in US turns out to be good, if those markets rally, then tomorrow there's a gap up, these people will be in trouble. But of course, the people who are selling, they know how to manage. So that's not a big issue for them. So overall, it's a disappointing close. We are heading close to the lower end of the trading range. The trading range is 24,000 to 25,000. We are heading closer to the lower end of the range. That is actually not good. So let us see what is going to happen tomorrow. So things are not looking good. It is time to be cautious at this point of time. Hope you enjoyed watching this video. Thank you for watching.